This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Dow deluge. What results from Dow stocks of General Electric, Goldman Sachs, and United Healthcare say about three distinct parts of the American economy: industry, finance, and healthcare.
The fine print. Ever do something as simple as download a coupon for Cheerios? Well, you just gave up your right to sue General Mills in court.
Stock pickers market. The Dow and S&P have their best week this year, and our guest tonight has a list of under-the-radar names that could see double-digit returns. We have all that and more tonight on Nightly Business Report for Thursday, April 17th.
Good evening, everyone, and welcome. A triple play for earnings today. Three Dow components, big ones: General Electric, Goldman Sachs, United Healthcare, representing three very distinct and vital parts of the American economy, gave us a pretty good idea of how the economy shaped up in the first quarter and what may lie ahead. Profits at General Electric beat expectations, making it the best-performing Dow stock today. Goldman also beat, closing in the green, but for United Healthcare, its results sent shares sharply lower, but that's only part of the story. Mary Thompson has more.
First quarter profits fell for all three of the Dow components reporting Thursday. General Electric's results still managed to beat analyst forecasts, though, thanks to strength in its energy and aviation businesses. Here's money manager Jack DeGan.
It was a good report. Back in December, when GE gave its look ahead, they were talking about 4 to 7% organic growth possibly this year. And, after the first quarter that we had with relatively slow economic growth, there was concern that they wouldn't make that, and they came out at 8, a point ahead.
The conglomerate is shrinking its finance unit and expanding its presence in faster-growing areas like energy. This year, it plans to sell $4 billion worth of industrial assets. Goldman Sachs continues to trim expenses. Like GE, its profits declined, but results beat Wall Street's forecasts. Goldman, held by a tight grip on cost controls, strengthened its investment banking group, and profits from its own investments. All of this offsetting what analyst Brennan Hawkins says was a sluggish quarter in its trading business.
Trading was okay in a difficult environment. Not taking anything away from Goldman here. I think they did an excellent job executing given the realities, but the realities aren't great.
In the last quarter, the realities of the Affordable Care Act set in for health insurer United Healthcare, though analyst Vishnu Lekraj says the impact shouldn't have been a surprise to the market.
Since the ACA was passed, everyone should have known this was coming down the pike. We expected greater competition, greater pricing pressure, greater cost pressure.
In the first quarter, profits at the nation's largest health insurer fell 8% from the prior year. Higher taxes linked to ACA and lower Medicare Advantage reimbursements behind the decline. For Nightly Business Report, I'm Mary Thompson.
The Dow ended down today, but the blue chip average was up 2% for this holiday-shortened week, and the S&P was the standout, up almost 3% on the week. The markets are closed tomorrow for the Good Friday holiday. So here's a look at today's closing numbers. The Dow lost 16 points, the Nasdaq rose 9, and the S&P added 2.5 points.
Our market guest tonight says investors should buy this dip. He's optimistic about stocks and not worried about the recent sell-off. Sandy Villery is portfolio manager of his own firm, Villery & Company. It is based in New Orleans. So, Sandy, let the good times roll.
I think that's exactly right. I think the market's going to be up about 6% this year, but I think stock picking is going to rule the day. We got to find those diamonds in the rough, those gems that can outperform and deliver good returns for our shareholders.
So, go ahead, Susan.
All right. So, you're saying buy the dips. Right now, so many investors are looking at the same information you are. They're worried about what's going to happen with interest rates. They're worried about all of this volatility. And so they're just playing it safe. And you're just jumping in and buying what you say are, really beaten down stocks. So what are you seeing that they're not seeing? Why are you so optimistic?
Yeah, I think you really do have to look at individual stocks, and that's the key word. So while a lot of stuff is going on, you've got all sorts of issues all over the planet. I think it's time to really just take a look at, be laser focused on individual stories. And while earnings were, GE had good numbers and Goldman had good numbers, tough numbers out of IBM and Google. Let's focus on, individual stocks. That's what I'm focused on. Good numbers
in terms of beating the forecast, but not necessarily good numbers in terms of growing profits. Both of their profits were actually lower than a year ago. But I take your point, and I want to move to your first stock pick this week, and that is like like-in-kind quality, ticker LKQ. Tell me about this one and why you like it.
Yeah, so these guys distribute refurbished and recycled auto parts, basically that are exactly like OEM or new parts, but about 20 to 50% of the cost. So if you think about it, body shops are really funded by insurance companies, and insurance companies want to get that car back on the road as quickly as possible for the cheapest price as possible. So we really like it. They really consider themselves a logistics company that happens to be in the auto parts business because they get these parts to their customers so quickly. Rob Wagman, the CEO, just invested another $318,000 into the company, and it's down about 17% year to date, which kind of creates this opportunity because as winter was so bad, a lot of body shop owners couldn't get into work and couldn't order those parts. And so that's just deferred for the next quarter. I think there's going to be a lot of pent-up demand and a great opportunity to buy a 22% grower at just a 20 multiple.
Okay, really interesting. And then the other one that you have on your list, Flowers Food, the ticker symbol there, FLO. It's the second largest bakery in the country. Tell us more about this company.
So I like this because it's boring, right? I mean, these guys were, they were founded in 1919 in Thomasville, Georgia, and now went public in 1968. But the second largest bread bakery in the country. They've got the largest bread brand in the country in Nature's Own. They were doing about $343 million in revenue about a decade ago, and now they're doing over $1.1 billion. So the nice thing is that it's a restructuring play right now because they just bought the Hostess bread assets out of bankruptcy. So now they have the 5 bread brands, including Wonder Bread. They've also got about 20 different bakeries and 36 different warehouse depots. So they're selling off about 9 bakeries. They're selling off 21 different warehouse depots. And so while margins dragged in the second half of 2013, we're going to start to see recovery in the back half of 14, and you collect a nice dividend yield. These guys have returned about $750 million in free cash flow over the last 5 years, and I think it's going to be a real big winner.
Let's move you on to the last one. We've got auto parts, we've got bread. Bore me one more time, Sandy. Come on, baby.
All right, we can certainly do that. Pool. It's the largest distributor of swimming pool products, not only for construction, but also repair and maintenance for your swimming pool. So these guys are as big as their top 50 competitors combined. I love companies that dominate a niche, and this is truly what they do. If you believe people are just going to put chemicals into their swimming pool and not let it turn green or black or fill it in, then pool's going to be a good play. Not only that, there's a deferred maintenance part of this story where there's 2 million pools in the U.S. that are between 6 and 15 years in age. And as your pool hits that magical 8-year, you're going to need to replaster it or it's going to crack and all this other stuff. They reported earnings today. They reiterated their guidance for 2014. They bought back about 484,000 shares in the quarter. And it's one that I think is going to work well as they can grow at 20%. I like it a lot.
Well, you know your boring stocks well, Sandy. Do you own any of these? Give me a little disclosure here.
I own them all. My firm owns them all just in New Orleans. So I just say we eat our own cooking, and that's what I certainly do in this situation.
Money where your mouth is. Sandy Villery, have a great weekend.
Thank you. You too. Take care, Tyler.
Now, another issue that investors are watching closely, Ukraine and Russian President Vladimir Putin. His televised question and answer session today attracted a lot of attention. Putin admitted for the first time that Russian armed forces had been deployed in Crimea before it was annexed. And he also warned of possible disruption to Europe's gas supply, giving Ukraine a month to pay off its gas debts.
Putin also strongly asserted Russia's historical claim to eastern Ukraine. This, as officials from Russia, the U.S., Europe, and the new Kiev government met in Geneva on the Ukrainian crisis. Steve Sedgwick has been there covering the talks, which ended with a joint statement.
Against the backdrop of increasing violence in the south and east of Ukraine, there were low expectations coming into the first big diplomatic talks between Ukraine and Russia since the crisis began. With the US and EU in attendance, concrete steps, it looks like, have been made. Diplomatic measures include OSCE international monitors going into the country to monitor disarmament, protesters and pro-Russian sympathizers vacating some of the government buildings they have occupied in the last few days, and the Ukrainian government agreeing to give more voice constitutionally to ethnic Russians. In the press conference afterwards, I asked John Kerry whether, though, the crisis that started the whole process in Ukraine, i.e. Crimea, had been given up on by the West.
The fact is that we have made it crystal clear that there is a significant difference over Crimea. We are not, quote, given up.
John Kerry there speaking to me in the press conference post what has been a very successful day, albeit at an early stage, of diplomacy in the whole Ukraine crisis. Steve Sedgwick for Nightly Business Report in Geneva.
And still ahead on the program, have you downloaded coupons for Cheerios lately? Subscribe to a General Mills newsletter? If the answer is yes, you just gave up your rights to sue the company in court. We'll explain.
A federal judge in Texas has rejected an emergency order related to the GM faulty ignition switch recall. Now, lawyers representing several vehicle owners wanted to force General Motors to issue a Park It Now notice for all of the 2.6 million vehicles involved. GM argued the cars are safe to drive as long as nothing extra is attached to the ignition key.
Morgan Stanley's first quarter earnings surged more than 50%, and that's where we begin tonight's market focus. The investment firm's profits and revenues came in better than expected. It also posted higher revenue in each of its major businesses, including surprising results from its fixed income division. Morgan Stanley also doubled its quarterly dividend to 10 cents a share. Shares rose about 3% to $30.76. Well, it was just the opposite story for DuPont. The chemical maker saw its agricultural sales suffer and its operating costs rise because of the harsh winter weather. Quarterly earnings matched estimates, but revenue came in below analyst estimates. DuPont said the rough weather shaved 7 cents a share off of the quarter's profits. Shares fell 1% to $66.98. And Mattel posted a first quarter loss on weak sales of Barbie. The toy maker also blamed a challenging retail environment as it had to mark down inventory that was left over from a sluggish holiday season. Shares for Mattel down 1% to $37.47.
PepsiCo posted an earnings beat as the company sold more snacks around the world and hiked prices, and that helped the maker of Frito-Lay chips and Tropicana juices to offset softer volumes and foreign exchange headwinds. Shares climbed about 1% to $85.55. Meanwhile, shares of Barnes & Noble moved lower on news the company's chairman and largest shareholder, Leonard Riggio, had trimmed his stake in the book retailer. Riggio sold 3.7 million shares, and that cut his stake to 20%. He says the sale was part of his long-term financial and estate planning and that he has no plans to sell more stock this year. Shares plunged 12% to $16.37. China's Weibo made its trading debut today, and shares surged. The social media company priced its 16.8 million shares at $17 apiece, which was at the low end of the expected range. Nevertheless, it raised more than $285 million from the offering. The stock popped 19%. Finishing the day at $20.24. But what exactly does Weibo do? Seema Modi takes a look at the potential risks and rewards of investing in Weibo.
Pop quiz investors, what's microblog in Chinese? The answer, Weibo. Similar to Twitter and Facebook, Weibo allows users to chat, upload pictures, videos, and share with friends. A huge user base, roughly 144 million monthly active users as of March. And 70% of users access Weibo using their smartphones. And just like other social media firms, Weibo makes most of its money through advertising. Weibo's annual sales nearly tripled last year, but the company still lost money. And Weibo's CEO cautioned that user growth is slowing.
So we did see some slowing down in terms of growth rate last year, for example. But as we begin to refocus our purpose, our effort on the user growth, user engagement growth, actually we see, tremendous coming back in terms of the growth rate.
The timing of Weibo's IPO is also questionable, as the market has recently cooled on social media stocks. Experts say that's why bankers were cautious and priced Weibo conservatively. But other Wall Street pros are optimistic.
This is one of the most underpriced IPOs we've seen in years. You get social, mobile, China all at once. It's beautiful.
As more users in China access the internet over their smartphone, mobile will be key to Weibo's success as a public company. And so will international growth. Experts say if Weibo can attract more users outside of China, it could one day rival the leaders of social media, Twitter and Facebook. For Nightly Business Report, I'm Seema Modi.
Walmart is launching a new domestic money transfer service called Walmart to Walmart. It will allow direct transfers to and from Walmart stores for a small fee. Now, the service is aimed at the retailing giant's low-income customers, many of whom don't have traditional checking or savings accounts. Western Union and MoneyGram currently handle such cash transfers, but their fees are higher. Not surprisingly, shares of Western Union fell today, but those at Walmart rose slightly to $77.66.
What would you do if you bought a food product and it made you sick, really sick? Would you sue the manufacturer? Well, not so fast. As first reported by the New York Times, General Mills is trying to limit any future financial awards from litigation. Eamon Javers has more on a new policy which could spread.
Click on the General Mills website this week and you'll see some new legal boilerplate. But that fine print could have huge implications for people who buy General Mills cereals or other products. The new language says if you use any of the company's sites or services, including simply logging on to generalmills.com, that means you're bound to a restrictive set of legal terms. And those terms say you'll take any dispute you may have with General Mills to a binding arbitration, not a United States courthouse. Companies like this kind of negotiation because they're more likely to prevail in arbitration and they don't face the kinds of financial damages they can suffer in court.
If it tries to do something wrong, if it does something wrong or causes harm to its customers, it's basically trying to shield itself from any responsibility, and shield itself from any legal action, and so it's a little upsetting.
But General Mills says the new boilerplate is simply routine. This is being broadly mischaracterized, said a spokesman. The policy would not and does not preclude a consumer from pursuing a claim. It merely determines a forum for pursuing a claim, and arbitration is a straightforward and efficient way to resolve such disputes. Lawyers I've talked to today said that the company might be pushing the legal envelope here with this interpretation of the rules, but they may have one thing going for them, and that's the Supreme Court, which has been very friendly to arbitration cases in recent years. For Nightly Business Report, I'm Eamon Javers in Washington.
We turn now to Michael Deutsch for a legal analysis of what this all means. He's partner of the New York law firm Singer Deutsch. So, Michael, you just heard in our report that General Motors' reaction was that this boilerplate is routine, and we all have signed a similar agreements with credit card companies, with cell phone plans. What is General Mills doing that's different than those agreements?
Well, they're actually just moving the ball a little further down the football field because these agreements are becoming more and more common as a result not only of industry's preference for them, but the Supreme Court, as referenced in the report by Eamon there, has over the last several years come down with 4 decisions which have made it easier for companies to continue to grow this mandatory arbitration part of dispute resolution rather than taking things to court.
Go ahead, finish your thought there, I'm sorry.
So I think we're going to see more and more of it, particularly if General Mills, let's say, gets away with this in not only the public realm, but in the courthouse.
So what would their legal justification for be? If I happen to go on their website, that's one thing. But if I happen to consume one of their products and it injures me, has nothing to do with what I did on the website, how can they justify removing my right to take them to a U.S. court to allege injury? I don't get it.
What they're doing is actually basing their decision to do this on these recent court decisions that I've just referenced. Over the last several years, there have been 4 major court decisions at the Supreme Court level where the Supreme Court has said that consumers or small businesses do not have the right to opt out of these mandatory arbitration agreements that they've either signed or agreed to through direct or indirect means. For instance, if you have a credit card and your credit card company sends you your statement, and before you can open your statement, it says you need to click through to our new terms and conditions. You click through, you don't read any of it, you've suddenly agreed to mandatory arbitration. The Supreme Court has said we're going to enforce that. And so what General Mills has done is they've looked at this and they've said, hey, we think we can make this work for a variety of different ways that we're interacting with consumers in social media, when they're coming to our website, or when they're buying our product. And they're pushing the envelope to see if they can get away with it in the courts.
All right, so do you think that this is going to spread to other companies? They're seeing what General Mills is doing, and other companies, whether it's a car company or a drug company, will do the same?
I think over time it is likely to happen, but certainly there are going to be two important factors that other companies are going to look to. The first is what is the consumer reaction to what General Mills has just done, because they're the first company to really step out and say, we're going to be very aggressive with what we can do right now. And the second thing is what happens in the courthouses, because there are going to be a variety of lawsuits over this. That's for sure. And once those wind their way through the system, at the district court levels around the country, you're likely to see a variety of different decisions. Those will be bumped up to the Court of Appeals, and then maybe eventually to the Supreme Court for resolution on this issue.
So let me play the devil's advocate, Counselor, and say, you know, why shouldn't a company be able to say, you use my product, you play by my terms, you got a problem with my product, we'll dispute it, we'll resolve it, but we'll resolve it in front of an arbitrator, not a court. Why can't I, as a seller or a business, be able to make that rule one of my rules of doing business?
Well, it seems that based on the recent developments in the law, that may be actually the case over time. But traditionally, it's been part of a negotiation between a consumer and a company that we are going to engage in a transaction, and as a result of that transaction, we're going to agree to these terms. Whereas in this case, you're just buying a product, you have no idea about what the privacy policy is on the website, and you're suddenly bound by these arbitration rules. And so this is really going to have to be resolved by the courts.
Real quickly, what could be a trade-off for a company like General Mills, a consumer backlash? They won't buy their Cheerios anymore?
Well, certainly you could buy a different form of Cheerios. Lots of companies are making Cheerios. I think the real issues are what is the effect on the consumers? Because consumers, if they're in arbitration, there are several handicaps aside from several advantages. And the advantage of going to arbitration is it's usually quick, it's inexpensive, you get a result, and you can both parties live by that result fairly quickly, much faster than the courts. But on the other hand, you're often giving up your right to punitive damages. There's confidentiality surrounding this, so the company is getting dramatic protection for mistakes it may have made in the course of producing its product.
Oh, sorry, we got to go. But fascinating conversation. Thank you so much. Michael Deutsch with Zinga Deutsch.
Thanks very much.
And coming up, betting the farm, Zynga is taking its popular game franchises to mobile devices, and the company has a lot riding on the launch. We'll be right back. If you're an internet gamer, this is a big day. And if you're addicted to Farmville on Facebook, it's a really big day. Farmville is going mobile. Farmville anywhere, you could say. And here's Morgan Brennan to tell us more about why this is such a big deal.
Just how big a deal is Zynga's long-awaited mobile version of its Facebook Farmville social game? You might say life-sized. The social gaming company has decked out its San Francisco headquarters in honor of today's Farmville 2 Country Escape launch.
We're excited to finally bring Farmville to our players. We know with our customer demographic that this is something they've been asking for.
This is the first time Zynga's launched a fully mobile game for its flagship franchise, representing a strategic shift away from desktop and Facebook, where Farmville first found fame.
Between kind of growth and monetization, it's different, but obviously we think a much bigger opportunity in the long run, and we're seeing that with kind of early results.
75% of the company's game development pipeline is now mobile first. And Zynga, which reports earnings next week, expects mobile to surpass desktop revenue for the first time this year. For this to happen, analysts say this game needs to be a success.
It's not going to be good enough for Farmville 2 on mobile to be the number 20 game or the number 10 game. Really, they need this to be in the upper echelon of games.
A lot is riding on this game launch. It's the first offering from new CEO Don Matrick, who joined the company from Microsoft 9 months ago. He's leveraging Farmville because it's still the company's most successful franchise, with 400 million players globally and over $1 billion in bookings over the past 5 years. But the company faces many challenges. It's been difficult to recreate that level of success with a new franchise. One reason the stock is trading about 60% lower than its 2011 IPO price. That and steep competition from other social gaming companies, like newly public King Digital and privately owned Supercell. Still, analysts are cautiously optimistic about Zynga's move to mobile, and they're watching closely to see what this farm can yield. For Nightly Business Report, I'm Morgan Brennan in San Francisco.
If it seems that the Ford Mustang has become an iconic car virtually forever, well, it almost has. 50 years ago today, Ford debuted the original Mustang at the New York World's Fair. It became the automaker's most successful launch since the Model A. Currently in its 5th generation, the 2015 Mustang, now on exhibit at the New York Auto Show, is a limited edition. Ford will build just under 1,964 of these special models before the full Mustang production begins later this year.
And today marks another anniversary. CNBC's Silver, the network that produces this program, went on the air 25 years ago today, a time when the business world was very radically different. The internet was still in its very small infancy. The Dow was trading at 2,300. The rate on a 30-year mortgage was 11%. And the president of NBC at the time, Bob Wright, introduced viewers to a groundbreaking new financial channel.
I'm Bob Wright, the president of NBC, and I'd like to welcome you to the most significant programming effort NBC has ever undertaken outside of the network. The Consumer News and Business Channel, CNBC.
We have come a long way. The economy has nearly tripled in size. The price of oil has risen more than 400%. And as you can see, our styles have matured a little bit over the years along with the programming.
Nice hairstyle.
Yeah, thanks. Yeah, there was more hair and less of me, I think.
It was an interesting period of time. And I think the internet and access to the New York Stock Exchange were big openers for our coverage as business reporters.
And think about how that business has changed over time. Amazing stuff.
All right, that's it for us. Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Mathisen. Have a great evening, everybody. We'll see you here tomorrow night for a special holiday edition of Nightly Business Report.
I'm Susie Garrett with the Nightly Business Report News Brief. Disappointing earnings from some big-name companies weighed down the blue-chip average today. Profits for Goldman Sachs, General Electric, and United Health all fell, but still beat expectations. By the close on this final trading day for the week, the Dow lost 16 points, the Nasdaq rose 9, and the S&P was up by 2.5 points. A federal judge has rejected an emergency order related to the GM faulty ignition switch recall. Lawyers representing vehicle owners wanted to force the automaker to issue a Park It Now notice for all the millions of vehicles involved. And Walmart is launching a new domestic money transfer service called Walmart to Walmart. It'll allow direct transfers to and from Walmart stores for a small fee. Be sure to tune in to Nightly Business Report right here on your public television station.